Pleasure to welcome today's expert, Magnus Bergman. I've known you for at least, I think, 8 years now. Founder and general partner at Luminar Ventures, one of Sweden's most active seed stage VCs. Magnus is a serial entrepreneur who went angel investor with investments such as Truecaller, and then went VC with investments such as Carla and Mynt and some SUP46 friends. So it's fantastic to have you here, Magnus. I'm going to leave the floor to you.
Thanks for that introduction, Sebastian, and it's great to be here. I was also one of the first tenants at the SUP46 in 2013. I remember it so well, and it was an amazing start. I think in a totally new phase for the Swedish startup ecosystem. It was a bit lonely before you guys started, actually. I guess I was one of the few full-time business angels at that time, and I read about SUP46 and I thought that's great. And then all the entrepreneurs, they're in one place, so I can just go there and sit and work with one of my companies and then see if I can get some more. And I did. I did get Karma and a couple of other companies also later in the fund. So yeah, it's been a great ride. I think not only for us and for SUP46, also for the ecosystem. So, and that's what I would like to talk a bit about.
Thanks for supporting us. Yeah. And the ecosystem.
You're welcome. And now I can just what I will talk a bit about today is what our expectations as investors. I left the years as angel investor behind, and it's a bit different. Angel investor thinking from VC thinking, and why is it different? I mean, for example, VCs, we have most of our money is not our own money. Some of it is our own money. So we have sort of a piece of the investment, but most of it is coming from others. So we have to think a bit differently. But I'll come into that, and I would like to explain a bit more on how we think, but also maybe to start off with more about other ways to raise capital, and we can come back to that during the presentation. And feel free also to ask questions about non-VC investors, because that is also a viable option. And I think for most companies it's not VC, so we have to be completely open. I want to try to describe what is a VC investment type, and it's fairly coherent. I mean, it doesn't differ that much. I would say in some cases, unfortunately, from there are of course VCs with different sort of focus, definitely, but the way we're thinking is very similar. And I start off with this. I've managed to, in a few, Sebastian asked me, why don't you sort of talk a bit about alternatives to VCs, and very quickly I got like 10 plus, I mean, different ways to raise money. And that's good news for you guys. I mean, there are many different ways to raise money, and I think there's a lot of opportunities there, but you need to know who to go to. You can't go to all of these actors in every of these segment. Then you don't have time to build your startup, right? So you have to learn about these things and understand what different investors, what's their phase and what are they looking for, and so on. And that's why SUP46 is so great, because that's they can help you with that. But I would say that if we start off with the most common investor type is and I've been one myself, so I can say it, but it's friends, families, and fools. And it's either your mom and dad or a friend, or it can even be your own money. But or someone else's time or anything, but that's normally the first place you would go to, right? And the advantages with that is, and I try to list some pros and major pros and cons, because there are always pros and cons to every way of raising money. And of course,
Is
the pros that they know you.
sorry to interrupt. Is that amount, that's Swedish krona?
Yeah, the Swedish krona, and I can't really see that line. I can say that I was guessing a bit on the amount. This is very early stage funding, so yeah, between 0 and 1 million. I would guess you don't want to have your parents move out of their house if you fail your business, right? It's a bit harsh, and I guess the cons is that they know you too well. I guess so. It's not that nice to come home to your friends and even yourself. You look yourself in the mirror and all the private money you spent on your startup. I wouldn't recommend. I've done that a lot when I wasn't sure to become angel or entrepreneur again. So I did spend and invest in my own companies, and that was not a good way. A little bit you could do it, but just to get started. But I really recommend to find investors, because they will demand things from you, and those demands will move you forward. They will move the needle, and you will need to move forward many times. Whatever company you are building, even if it's selling hot dogs, or anything to Google, it always a lot of work to start a company. But that's one way of starting, I guess, also, and I include your friends, yourself as a friend. I would say it's the same type of same type of investment. Then, of course, it's the accelerators, and that has become something fantastic. I think in the last few years, you have Sting, which is also part owner of our first fund, and I think part owner of SUP46, and they have great programs, and it always leads, most of the times it leads to investments like 500K Swedish, and they can help you with almost anything you need, and they have great advisors. And you have Well Street, and you have Antler programs. So I think we have invested now in 5 Sting companies out of 31 companies we invested in, and we were into 2 Antler companies, and Sting has been going on for a bit longer, and but they are really great, and they also take on companies that does not necessarily go the VC route.
Do you treat, sorry to interrupt, let me know if I'm getting annoying, but sometimes I just feel like I want to jump in.
If you have questions, it's great.
Do you look at companies, most of the times I guess you invest in companies that comes out of accelerators, like a little bit later, they mature a little bit more. Do you look at companies in different ways when they come from an accelerator versus from the streets?
No, we don't. If we miss something, we might feedback that to the accelerators. That works really well, and they have really taken on to that, and they try to adapt as much as they can to us. If they hear that the company wants to go VC way, they try to help them to get to the VC route, and they're very it's much easier for us, because they are much better prepared than most companies, I would say, because they get the broadness of the help they get is really good. I'm talking about Sting and Antler primarily, I would say, because they have the same objectives. Well Street maybe think a bit different. They don't always want to go the VC way with their companies, and that's fine. It's just we respect that, but it's up to the company there, I guess. And but there are many accelerators now, gaming accelerators also out in the country, and so on. So, and local accelerators in Gothenburg and Malmö and in the north, and even in my old hometown Västerås, they have an accelerator. So it's of course, obviously, it's different quality. I mean, I think Sting was selected like the global accelerator of the world, and I think they are really on that level. Okay, so to move forward, I come to angels, and that's a natural go to, I would say, early on, because angels, you can look and you can find someone that can invest in your company early, and also have knowledge about your area, and also have time to help you. So that's what happened to me when I had 10-11 companies. I decided to go full-time into the angel investing, and that's a bit the breaking point. And that's also when I invested in Truecaller and Prezi and a couple of other companies. I realized this is a full-time job. I mean, these entrepreneurs, they need everything, right? And I've done a lot of things that they wanted to do, and I can help them, and I want to help them. It's really a lot of fun to help someone to create something unique. So and angels, there are many in Sweden. Stockholm ecosystem, and also in Gothenburg and Malmö, I would say, is a world-class ecosystem, meaning that there are angels that can help you and have money and have time. I talked to a lot of people that done their exit, and they asked me, what should I do now? and I tried to push them into the angel role, and not go into like trying to build their own startup again when they're 45, but to help young entrepreneurs instead. And I mean, what's the probability you take a lotto ticket again and think you can win again, and because you won before? It's very hard. Of course, there are serial entrepreneurs, I know that, but it's I think and I'm happy with everyone that feels that they are willing to have a go at it again. But I mean, the workload is amazing, and I must say, at least to create a VC-backed venture. Yeah, and then crowdfunding. And the only advantage I can see with that is that it can give you customers. So these supporters, they could become your customers, but I don't see it as a long-term solution, and it hasn't been super successful either as a funding. It's normally, okay, now the money run out, and my cap table, the ownership is screwed up. What am I gonna do? It's a little bit like that. And if you come with that cap table and that owner list, and someone want to inherit that, it is a problem for any VC or even family offices or most of the professional investors. So I'm not super excited about it, but I mean, if you don't need a long-term solution for funding, it's fine. And if all you need is short-term funding, and you need 5-10 millions, but a lot of customers that want to invest 100K each, then that's fine. So I'm not judging. What I can be a bit judgmental about is the ICOs. That was really hot a few years ago. I mean, obviously Web3 is something we look into a lot, and it's super hot right now. But the ICO, I mean, that was deemed non-profitable many years ago, and that's definitely not something to recommend now. But I'm sure it will come in a new form, which is more serious later on. But I'm quite surprised that there are not more people in jail in the US right now for doing these ICOs, because the regulatory, I think it's the same regulations as the stock market. But I don't know if they know what to do about this problem. But yeah, I recommend to stay out of it for the time being. And so then we come to venture capital, and the thing about venture capital is that you can have unlimited access to capital, because this is like one line in this description, but there are like many types of venture capital depending on the amount you invest, and we are typically like the first VC that you get to, but half of our companies have raised in following rounds 100 million SEK or more, and they have unlimited access. I mean, you have VCs like us, and then Series A players, and then Series B growth funds, and And yeah, Truecaller took in 1 billion before they went to the stock market. They took in another billion, and that's still a little money for a VC-backed company. So they managed to get very far with only 2 billions. But if you look at Facebook and others, they've taken in so much money just to do the land grab that you need to become a global winner. But that's the thing about venture capital. I mean, the dynamics of a fund, you need to grow 100 times quite quickly and become like and grow out of Sweden very quickly and become an international player. And that's because otherwise the fund dynamics doesn't work out. But we come to that. But it means that you have, if you can fulfill the requirements, which we will talk about a bit later, then you have like unlimited access, I would say, to money. And most of our companies are getting into that. We'll see how long it holds. I mean, we're an early stage, but it's interesting. And then you have family offices, which can be quite good and a bit long term, I would say medium term. They are less demanding on growth. They are more relation driven. They might be specialized in something they care for, like sustainability or e-health or something they know because they have a background in that area and can really help you and give quite a good funding. And we do a lot of co-investments or several co-investments with family offices. So that's quite good.
Quick question from Maya. Thanks for asking. Hey guys, talking about PE and private equity. Given the fact that private equity is the main funding vehicle for both venture capital and family offices, angel funding, and even friend foods of family, I assume here when we mean Anglo-Saxon definition of PE as a funding body versus the European one. Maya, can you elaborate on your question so I make sure I get it right? Feel free to jump on the mic.
Hi. So private equity is basically just a type of equity that is linked with private individuals. And in essence, venture capital, family offices, definitely family offices. And then, of course, angel equity and the 4-4 equity is basically all linked to private equity. So I'm just like curious because and then, of course, in the American system, there is the private equity as like a funding vehicle in itself. So I'm just trying to like see how this private equity, given the amount that is mentioned here, where in the puzzle it fits, because basically
this is private equity funds.
Okay, so
Yeah.
funds. Okay, so
the fund structure,
like the system. Okay, thanks. Sorry, I just wasn't clear about that.
Yeah,
no worries.
And then what you're thinking about is like LPs, like limited partners, and those invest in private equity funds and also in our funds, and those are and our LPs. Who invests in us? I would say then that could be a question you want to ask, and that's normally like governmental. So yes, definitely there are some private investors, private funds, but it's mainly like EIF and some invest, and there's a lot of governmental money going into at least European venture. I'm sure it's more evolved in the US, but in Europe has been a bit behind. So the government have had to go in and to kickstart the whole. I mean, our first one was mainly governmental money. Corporate VC, yeah, you can get money and a critical customer, but it's always difficult as if you want to build something really big to adapt too much to one customer. So, and it might not be the right network, or they might not have the right network for further funding. So that's something to think about. And then of course the stock market, but I wouldn't. I mean, if you have an early stage, it's very risky because the stock markets crash every 8 years. Now it's a bit longer, but it did crash eventually and go up. So you're sort of doomed to follow the sentiments of the markets. And if you're building a startup, it might be the best opportunity whilst the market are crashing. I mean, I invested in Truecaller 2009. and it was like an Arctic winter, and my angel money was super efficient at that time because there wasn't any money anywhere. No one wanted to invest in anything. That's a bit sad about the stock market, and I know it's gone really well now, but now, yeah, the last years, but no one knows. No one can project the future, right? Everyone knows that sooner or later, there will be a correction.
Also, stock market requires different type of obligations when it comes to reporting and accounting and stuff.
And if you don't fulfill them, you might go to jail, and that's a bad thing.
Yeah, that's bad.
Some people do that, and actually Sweden is a bit of a warning. Sweden, I think, jails 90% of the European sentences of market fraud is in Sweden. So they're super active, and they're
wow, I didn't know that.
Yeah. So yeah, watch out. It's but of course you can work like you can always stay clear of, but sometimes it's like, can we do this or not? And you need to sell your shares, right? Even if you're insider, or and you someone might sue you, or you might be have an unpleasant call from the lawyer, from the legal side of things. But yeah, private equity is something. Actually, private equity is super important for us because they normally buy our companies at the end. So that's they're super important for us. So if we don't want to go to the stock market, we can go, and the company is still growing like 30, 40, 50%, and we can go to a private equity fund, and they're happy with that. And it's a great exit for us. It's just there's just a new owner coming in, so it could be great for the founders as well, doing their half of their exit at the time. That's normally how they work. So they want us to have you a bit on the cap table as well. Now, of course, it's a long list. I'm sorry, but it's it could be good to have this list.
For sure. We'll be sharing the list afterwards.
There is no dilution. It's loans actually that you have taken towards your growth, but it can become quite expensive, especially if you don't fulfill your growth needs or your funding plans. It can become quite expensive.
And Annika adds, IPO can be total drain of resources for smaller growth company. Death of innovation. Good comment.
Yeah. So that okay, but not too much for sure. That's yeah. So a bit intro of myself. We have Luminar. I will skip through this quickly, and we come into how we assess companies. But we're into our second fund now. So this is the first fund. We did 30 investments, and 20 of them were quite early investments, like pre-seed. So we invested between 1 and 5 million krona. And 11 was seed between 10 and 15 million. And our first target area was Sweden, but now we're focusing on also on the Nordics as well. And this is our team. And if you look on our background in our team, we've been entrepreneurs, all of us. Myself in Icon Media Lab as entrepreneur, and then as investor in Prezi, Truecaller, Karma, Soundtrap. So that has helped me a lot to be able to be on the entrepreneur side of things, and to understand the challenges that they have. Obviously, the biggest exit I've had, Icon Media was actually the first unicorn in Sweden, and 20 years ago, a bit more than 20 years ago. Truecaller was halfway to a decacorn actually, but now it's like 30% of a decacorn. So let's see. I'm quite sure they will get there.
Sorry to interrupt you, but we have about 15 minutes left, just so you know.
Yeah. But this is okay. Okay, we have the ecosystem, and that's what you get also if you invest. If you get us as investors, it's not only ourselves; it's all the other funds actually, and our networks. So that's That's the thing. Yeah, and then what is venture capital? I think you see that it is about creating new industries, and that's not just to create a company, I would say, but you create a new, and there's a lot of risk in it, and that's also the reward. And this, you can see that it's deals done. There's 6% of the deals done. If you look at the return, 6% of them give 60% of the returns. So it's very few companies that give the returns, meaning that we need to invest in many companies because we take a lot of risk. But then when it's only 6%, then it also means that there will be like 94% that don't give so much return, and that means that we have to expect a very high return from some of the companies. So that's why we will ask for 40 times the money we invest, because it's only 6% that can reach it. So what we look for, we start small but think very big, and it's and we favor the product-led growth, which is a bit Swedish, but as we're not that maybe good as the Americans and the UK people to sell, we make excellent products instead, like Spotify and so on.
Sorry, jumping in with the two questions. First,
Yeah.
on the stats, and are you referring to the stats, the diagram that was just shown?
Yes.
Yeah. So is there like a gender breakdown on that, in terms of who gets what money, and if it's like a specific group
There's a
who
lot
have
of
better
breakdowns.
output?
Yeah, there's a lot of breakdowns on that. I don't have it here right now, and I don't know it by heart, but
let me ask you a leading question. Do you know if mixed teams or mixed meaning male and female founding teams, or only female founding team, are their companies performing better or above average, or do we have any such patterns in the stats?
The thing we are measuring is the number of female founders compared to inflow, and we support the last year was 25% where there was a female founder, and the inflow was just below, somewhere between 5 and 10%. I'm not sure this year what it was, so we overrepresent quite a lot. And then we measure how much females are in the teams, and we are up to 45%, which is a very, very large number, and that's because we prioritize this. But I don't have that sort of data. I mean, we will get that data in our own portfolio, but as we're a seed fund, we only have this early. We can't see the results really yet.
And also, like, adding not only gender but also I'm not going to say race, but heritage, I would say, like multicultural heritage, if I'm allowed to rephrase your question, Lauri. Do you see, like...
I was investor in Truecaller and also Prezi, and those are both multicultural. I think we have a super good lineup there with several teams that are some like Greenleaf, for example, and several more in the team, and that's also what we see, that the people that get through, it's just like the female founders. Once you get through, if you manage to get through, you're probably an overachiever. So it's a good decision to, and we like that a lot. So, and we favor those teams. We spend more time on it to see if we can give them a chance.
That's interesting to hear. And Maja, thank you for sharing some interesting stats for those who want to read more, go deeper into this topic.
That's the only way. It's sort of, if we only have like 7 or 8% of female founders applying for us, we have to work harder to increase it. It's the only way to construct change from our side and to help them. And then for example, in Hacker Closet, we were very early there, but then we said you need to get another founder on board and so on. And then when
Who is a white male?
no, it was a female, but
Yeah.
but it would have been okay with a male too. I mean that's diversity as well. But no, she found, and they are performing like crazy. So
Yeah,
we have to give them more hope, more help than it's the only way. Otherwise,
yeah. Laurie first, and then Leslie after that. Laurie asked, "What would you recommend on the founder mix? Do you recommend more female and diverse founders, or what have you seen?"
No, I don't like to start that way. I mean, obviously, I like to think of it as a balance between the commercial and the technical side of things, and so obviously, like and that's super important. And some companies are more tilted towards one side, but we're never going to support just two hackers from KTH. It's not going to happen unless they are super good on something else, like product or commercial side, or one of them are. Then obviously, I mean, female founders, and also, I mean, diverse teams. That's a great plus, and we spend more time with them to try to fix things, obviously.
Yeah, and
we have to start with the business and what the business requires. That's
yeah, and because of the stats being so skewed, do you see we need to also continue through in the agenda? But I still
yes,
want
I was thinking if we can, sorry to interrupt you,
Go
if
for
we
it.
can continue with the presentation, and then we still have 15 minutes for the questions.
yeah, there is
that
good
way,
point.
Magnus
we
can
can talk more
share
about this.
stuff.
I mean, we work quite hard with these
yeah.
questions, and also sustainability as well.
Yeah,
so.
yeah. Leslie, is it okay if we save your question for the Q&A? Thanks, appreciate it. Okay, let's continue on. Again, really appreciate all the incoming questions and comments. This is why we do those things. So keep it coming, but let's continue, and we're saving more of that for the Q&A that will happen in just a couple of minutes.
And thinking about your mix, I mean, you need to find your industry segment that you want to disrupt. If it's in transportation, logistics, or fintech, e-health, edtech, there are so many industries right now that are being disrupted, that are big. And then also the technology you would need. And there are some companies that use super simple technologies, like Kry, for example. It's just video calls. It's been around for 10 years, right? It's not an innovation. Obviously, there's a lot of tech when you build something that big. But it's not AI or anything like that yet, but it will become probably. But that's not how they build a company. So and that's and there are so many opportunities. But it's never just looking at the technology. I would say you also need to find an industry, and it has to be applied to something. It's never just that I have this super cool AI company. You need to but what you're gonna do with it. So, and then what we look at in the investment is obviously the market timing. So I mean, AI been around for a long time, and video calls has been around for a long time, but wasn't any model to compensate for it. They couldn't get paid, but they found out how to get paid. So there was a market timing. And there is some technical IP, but I can vary, but it needs to be super scalable. And what is cluster leverage? I mean, we prefer to invest into something where Sweden is strong. So if it's there are many areas where Sweden is not the best place to invest, and that, for example, hardware. Then you might be better off as a Korean investor, and then I'm not a Korean investor, so I can't, or in China, or in the US as well, but we're not super good at everything here, and so we need a cluster with knowledge and so on to build upon, to build your startup and to steal competence from, and then of course your execution to date and the market size. Yeah, and then you need like customer feedback. At least someone can say something about the product. Maybe you haven't made any money at all, but then at least you would need someone to say something positive, and some initial revenue, hopefully, but not always. Actually, preferably with an MVP out, and also you need a thing, obviously. I mean, that's maybe the part of the founder team that we talked about. I mean, if it's more a mixed team, or if they have like sustainability, if they have some motivation, their motivation to do this. I mean, how high is that? And yes, and a strong dynamics in the team. And I think that's the most difficult part you will ever have, is to select your team members or your founding team members. It's much worse than selecting someone who to marry, because this will last longer. If it's, I mean, average marriage is 10 years. This is supposed to last longer. And then the advantage here is that you can be 3 founders. It's hard to marry legally, at least 3 persons. So, but that I think is the most important part of founder journey.
We have only a couple of minutes left, so maybe
I can skip some of this. I mean, this is some of our thesis.
Could you go back? So, could you go back to the? Thanks, Kat, for the jumping in. Just, I think I really like this slide. If we can just like stay on it for 1 minute, if you want to like quickly comment on it. Again, we will share the deck afterwards, so no need to run through all the details. But I think this is very important when it comes to investor expectations. To like, okay, what do you mean? What are you looking for more specifically?
Yeah.
Is there something you want to comment on here?
Can be quite hard is the TAM. It's the total market size. It needs to be a VC case, you need to have a really big market size, because otherwise it's really hard to become big enough to be investable to that extent. I mean, you will have unlimited capital if you become a VC case, but then you will have to have also unlimited potential, not unlimited, but a very large potential, and that's something that many underestimates, that it needs to be a large industry. And that's sometimes it's difficult because you might create a new industry, so there's nothing really to compare with, but you have to argue for it at least. But you will get this later on. You can
one thing that sort of steals my attention on that slide is the very specific last point that you have that refers to the cap table. At least 60% ownership. Could you just comment on that?
Yeah, and that's very low. I mean, because when you get into the VC environment, what happens is you deploy a lot of capital. So if you own 60%, it will quickly become 30% for all founders, and then, or not quickly. I mean,
for a new round.
Yeah, it will be eventually will create 2 to 3 times the number of shares you have when you start. And that's a dilution, and you won't be able to put in your own money for it. So it's best to start with 80 or so, and some to angels and some to incubators, but you can't come like you have less than 50. Then we normally say, okay, I love your company, but come back when you own at least 60%. So, and that's a trouble for many, especially those that have like taken some time to develop the product and so on. But then you need to find other ways to fund it, and we spend a lot of time going through that long list. But and
the reason why you have that is because also if you're doing upcoming rounds, like Magnus mentioned, like you will be diluted for each and every round, and if one of your moves is to make sure that the companies can find funding as a next round after you. But if you're too diluted, there will be no Series A opportunity, because your cap table will be too messed up.
Yeah, the Series A play, they say 50%, and that's why we say 60, because we need to dilute you a bit, but preferably more. So there's a margin, and it always ends up the same. I mean, at exit, when like for example the Truecaller founders and so on, normally own between, I think the average number 23% founders jointly, and it's because of this that it takes. That's what it costs. This amount of funding have costed them, but obviously then the value of those 23% is much more than 4 times the 100%. I mean, it's if you see what I'm saying, I mean, it's like even if you had 100%, then you wouldn't have a global category leader. So that wouldn't be worth much. But
exactly, we're getting some incoming questions, which is awesome. Let's continue on the agenda, and then we'll
it's only
bring
one
those
point
up
left,
on the Q&A.
actually, and that's sort of the legal stuff. And here as well, there is a website we have set up at Luminar, and it's several steps there, and this helps a lot. I think you really, if you read through this, and it will really help you in the forthcoming. I mean, you see there, it starts with legal assessments, and then you have a term sheet. And actually, when you do a term sheet, and this is very early in the process, you're done. I mean, we have never walked away from a term sheet because for us, it's the like matter of honor. If we make a term sheet with an entrepreneur, they will have to say no to other investors. And we don't want to be the investor in town that don't honor their term sheets. It's different in other countries, I know, but at least from us, and I think for the whole ecosystem in Sweden, we don't walk away from term sheets. So, and you see, and before term sheets, so that's your critical. When you sign the term sheet, you're done. And then, but then there's a lot of left to be done, and this can take a long time or little time, depending on how well read in you are on things. I mean, the format and the demands and the legal demands for an investor is very similar between different VCs. I mean, some of them are a bit let through, but it's all about, we invest money and we don't want you to walk away, and that's basically the thing. I mean, there's vesting and so on. You own the shares, but if you walk away, things will happen. You need to sort of take back some of that because you need to save those shares for someone else doing the job you were meant to do, and so on, at least for 3 or 4 years when the company is supposed to be built up. And we have that complete process described, and I think it's really good to read through it and all the different, like what is vesting, what is dilution, and so on, what is cap table.
That's great, and that's on your FAQ page, right? We don't have to run through that now, of course, but it will be also included in the deck that will be shared.
You can just click on it.
Yeah, so this is a typical seed stage investment structure. When you go earlier, I've seen plenty of times when this is like completely not the chronological order things are done in.
Yeah.
Like, would you say like earlier stage, more less structure, or what's your?
You mean
always
before,
keep
this is typical for an institutional investor. I think before it's like startup docs or startup tools is fine. They are the step between that and what we do is you're halfway through. Which is good, I think. But anyways, before you start to contact investors, I think really read through our our primer there. There's like 4 or 6 pages, and then
that's awesome.
Happy to explain anything to anyone, but then you will. I mean, some entrepreneurs have signed a term sheet, and then they come back. What do you mean by dilution? It's like, no, but you can't do that. I mean, and so on. So I mean, but then you have to do it because you signed it. So I mean, so
make sure you read up on the legal stuff. And have your papers in order.
That's basically, I have some reading. You can reading guide, some great books about creating your own play bigger. I think I really love that book. I just read it, and and the startup tools, where you find all the legal stuff as well. I guess you also come to that. No, 8 minutes left, 10 minutes, so a bit.
Awesome.
But sometime I think you have the questions. So
Yeah, for sure. Let's go back to let's first just mention something Annika said, which is good. Like, don't get fooled when you look at equity exchange. There are accelerators take equity for office space. Make sure you don't fall into that trap. Like, if you are offered something in exchange for equity, make sure it makes sense for your business, because that's your the only sort of exchange value you have is the value of your company. So
yeah,
use it wisely.
Very, very, very true.
And then
I'm gonna interrupt one more time. I'm sorry. Before we jump into the Q&A, I'm gonna launch a poll. Just a couple of feedback questions. It would be really helpful to us if you can just share your opinions on this workshop and on what you would want to see in the future.
Awesome. Thanks, Kat, for reminding us of that. Please fill that in. It's just a couple of questions that would help us improve and keep those sessions relevant. While you are answering those, let's go back to the chat. Question from Anne. When raising a seed at seed level, a lot of investors are looking for high percentages. Is that because they can, or is it because they want to test the founder? Magnus, what's your comment on that?
We broke up there. Can you take the question again?
Yeah, so sorry about that. When raising seed level funding, a lot of investors are looking for high percentages. Is that because they can, or is it because they want to test the founder?
Our ownership. Yeah. I mean, there is actually percentages. When you do a seed round, it's normally between 20 and 30%. That's a market standard. And I know some try with 10 and 15 and so on. But the dynamics model, funding model, only like works between 20 and 30. That's because otherwise, when you have this, 6% of your portfolio that turns really good, you don't want to own too little. It doesn't work out, and that's the basis of the ownership. So it's not like you're trying to take as much as you can, because we don't want to. Because on the other hand, you know that, and we know that you won't be able to raise a Series A unless the founders have enough. So there is a breaking point on this, and obviously now in the latest valuation has become really high. So I don't think that there is a problem with valuations.
Do you feel that, and I hope that answered your question, just to tie into that answer, that would mean if there's a seed investor that says, I want 40% or 50% of your company.
There won't. There's no.
It's just that's not a serious
happen.
offer.
I can promise. Then they're out of business or out of job the next day.
Good.
It's not gonna happen.
Yeah.
And if they do that, they're like a fake seed investor. They're not institutional.
Yep.
Normally we seek to reach 10% at an exit, so we need to get up to a 15%. But sometimes we end up with a bit more because we needed to support the company. So, but when we have 20, we start to get really discomfortable about the situation because we're intruding on the founders.
Yep. So founder-friendly seed investors.
Hi, Annika here. Can I ask a question regarding that? You said, Magnus, that you prefer 60% left before the seed round. The companies I've talked to is more 60% at A round. So how
that works too.
works out if you take 30% on the seed round and you have a pre-seed round, and then you have friends and family, since pre-seed today is what seed rounds were like 10 years ago. So I mean, now you have much higher stakes at the seed level than you had before. So how does the math work out from your perspective?
Well, was the question why others have asked for 60%?
No, more that we see larger rounds at the pre-seed, which is basically what seed rounds were 5-10 years ago, and the current seed rounds and the expectations is more where A rounds used to be. So you said first that you want 60% left for the seed round, whereas I've heard more 60% at the A round. So if you take 30% at the seed round,
we have a lot of
sort of
contact with the Series A players, and we actually conduct a bit of a survey, and we landed that many of them 45 was also okay. But I know
that's really interesting.
Yeah, but I know some of them say 60.
Yeah.
And in the US you can find VC funds that say 80.
Yeah,
so,
I know.
So it's a matter of taste.
Yep.
Okay, thanks.
Thanks for jumping in with that question. I really want to make sure that we'll get the answers in order. Leslie, I don't want to miss out on your question. Do you want to jump in and ask? What did you have? What did you want to ask Magnus? Looks like she's away. Let's take another question from Shorena. Here's a good one, or all of them are good, but the really good one. How important is this to have several people owning the company? I'm gonna interpret that as co-founders. Do you find it too risky when it's only one person?
Yeah, I mean, we have invested in out of 31 companies. When we had 30 in the first fund, we only invested in one single founder out of those 30. So that shows a bit, but that was in Sorello, but they performed really well. but there was such a personality in this person that we could sort of mitigate that because there is an increased risk. It's not easy to be like a tech expert and a super commercial person in one person. It's quite hard, and it's quite hard to retain people and make them work as hard as you. But yeah, so I would definitely try, and that's why I'm trying to say a bit that this is the most important thing you probably do in the company, finding your co-founder or co-founders. The average number of founders in our companies is 2.3.
Good
so
to know.
That gives some guidance. And,
yeah. Maria asked, what's the average ticket size for Luminar?
There are two types of companies. So the pre-seed ones, it's now in the new fund, it's between 1 and 10 million. It was between 1 and 5. So we increased that a bit because it's all sliding upwards, as someone else mentioned. And in the first fund, it was between 10 and 50 for the seed rounds, but now it's between 10 and 20, I would say.
Yeah, it's good to know.
And the total rounds may be doubled, so it might be 30 to 40 in the seed and 10 to 15, maybe up to 20 for the pre-seed.
Yeah, what's the average time it takes from first conversation to money on the bank account?
I don't know the average time. It all depends, I guess, on the entrepreneur owning the timetable. We've done it in 10 days to a term sheet decision. But then you get the money. So they're not on the bank, that's for sure. Because when we call for money, there are ways to get around that, but it's normally like 20 working days. But if we have money on the account, we can deploy them quite quickly, which we've done. So
awesome.
I don't have a statistic, but the general rule is that you should own that timing. That's
yeah, I think we have run out of time. And Shorena, I saw also another good question coming in, but I need to end here out of respect for everyone scheduling. However, me and Magnus will continue on a fireside chat that will be streamed on our LinkedIn and Facebook. So if you want to hear us continue talking about those things, you can just tune into our channels in a couple of minutes. You'll get access. Like, how can they reach out to you, Magnus?
And the best is the email. So magnus.bergman@luminarventures.com. There's also my email address on our website. So you can get
Awesome.
that.
Thanks so much, Magnus, and thanks everyone
Thanks for listening.
from tuning
Yeah.
in. Yeah, I appreciate it.
Thanks for
we'll do
coming to our event. Yeah.
for sure. See you guys on Facebook or LinkedIn, and have a great day.
And good luck with your projects. I'm really hope to support you one day.
Awesome. Thanks all. Bye.